shop with your favourite cousins, James and Alex Fitzgerald. Biggest week of my life, cuz, and as much as I love recording with you, it would have been nice to, take one thing off me list.
It has arrived. You're the only person I know who would move house simultaneously at the same time that you choose to have a wedding.
Well, did I decide it? Well, not really, but it just, timing's a funny thing, isn't it? Timing is a funny thing.
I'm sure you could have waited a week or two to move house, but in any event, you just that is not your style.
I'm an ex-Airbnb host, right? Had 10 Airbnbs for 3 or 4 years back in the day.
Look at this guy.
I've got my brother.
War stories.
I got my brother. Oh, so many war stories. So many toilets scrubbed at 5 a.m. But anyway, I've got my brother staying, my mate Jared, and then we've got our other mate Lior coming in from Israel, and of course we've said all of them can stay with us.
Oh no!
Yeah, I know.
No!
I know.
Oh, so debuting the red carpets this week.
Yeah, and when you say red carpets, that is no play on
no
words,
exaggeration.
no word salad. Yes, my husband to be for some reason chose red carpet for the whole upstairs. And look, I'm not going to lie. At first, I was like, "You're mental. You've absolutely lost it." And I like it a lot. It's grown on me. So
there we go.
Yes. So anyway, I'm off again for 2 weeks after this. So
I didn't ask where you were going. I knew you were going for 2 weeks, but where are you off to?
Well, you got to break up the mundane, with the biggest week of your life. So I'll be getting married on Sunday, the 28th of the 8th.
Also your birthday.
And also turning 30, which is fucked, really, There's no other way to put it. I'm 30 this Sunday. We started this podcast 2.5 years ago where it was two cousins under 30 and, as luck and time would have it, we both slipped into that over 30s bracket, mate, or 30 plus. I'm going to Fiji after the fact.
Nice.
So getting married, few days off. We got a client event next Tuesday. Can't miss that. So I'll be there for that because I'm dedicated. And then I'll pop over to Fiji for a bit and look, hopefully do a bit for this tan because I'm looking like Casper's ugly sister.
And have you gone the turmeric shade for Sunday?
Well, yeah, turmeric with a bit of cacao, if you will.
Or what'd you call it? The Israeli something?
Oh,
yeah.
I don't know. But my friend Ripper wrote to me and she said, I laughed my ass off and you're very funny. You've absolutely lost it.
Bit of turmeric. All right.
Bit of turmeric.
Looking forward to that on Sunday. Hey, on the weekend, I was down at the Cooperoo Kings, my old footy club, and one of the fellas there was telling me about this new app. I think it's an app. But it's a new social media platform called Be Real. I'd never heard of it.
What a legend.
I'd never heard of it. You've put it in the show notes and I thought, of course Alex is all over it. What is it?
Absolutely. Now, of course you're not because you're actually off Instagram. You're having a little detox. Hiatus. I respect that, by the way. Be Real is essentially what the app aims to do, which is kind of interesting, is strip away this whole fake life on Instagram and Facebook where people upload photos of, their lavish holidays, their highly edited, yada, yada. Be Real works that once a day you get a notification and you've got 2 minutes to upload what you're doing in that moment. So if you're not wearing makeup, you're not driving a leased Ferrari, you're not editing it to look like you've got eyelashes out to here. It simultaneously takes a photo of your front camera and your back camera to show exactly what you're doing at that time. Now, of course, you can upload late or early, and it actually says if you're late. So, a bit of speculation you waited till you were dolled up to go out with the girls, to take a photo. But it's pretty cool. Do we need another social media app to waste time? Absolutely not. But I got to say, I think that it's quite a compelling idea. It strips away the phony life that many of us live on Instagram.
So talk me through, where does it rank? You've got Facebook, Instagram, TikTok, Snapchat. I assume you're on most of those. Where does this one rank in the hierarchy?
No, I don't use Facebook and I don't have Snapchat. I'm not 13 years old anymore. Key emphasis on the anymore. I was. And it was not around then. Was not around then. No, for me, probably, I don't know, Instagram and then secondary BeReal and, secondary TikTok, sorry. I like to waste time.
Okay.
But I deleted the app TikTok, cuz. I deleted the app TikTok.
I like to waste time.
Yeah.
On a secondary TikTok, I like to waste time.
Yeah. I like to use that to waste time. Yes.
Nice.
That's my waste time app, but I deleted it for that reason.
And before we get into it, did you see Adam Newman, the founder of WeWork, has been given $350 million worth of backing for his latest venture? I could not believe it.
You know what? I can believe it in some regards because it takes a particular guy to do what he did with WeWork. You can bend that phrase to any which way you like, but it takes a particular guy. So hopefully they've come in the new investments with that big
it's the biggest
VC firm. Sorry.
Yeah, it's the biggest one in Silicon Valley. It's the biggest venture capital firm in Silicon Valley. Has given him $350 million. It's their biggest investment.
Oh, my God. Look, I listened to the podcast. I believe that you and I had chatted before, but you watched We Crashed on Apple TV.
Yeah.
It's very good. It probably depicts him as being a bit of a nutcase, but I think everything does. But look, there's a lot of genius in that. So, I don't know, maybe this VC firm have gone through all the fine details and, he doesn't have as much say as he did with WeWork. I'm not really sure.
Well, for those not familiar, check it out. We Crashed, great podcast that Alex put me onto. I watched the TV show on Apple TV. It is about the WeWork story. Adam Newman started WeWork, was worth $50 billion, the company at one point. He got paid $1 billion to leave the company. Became a billionaire, and they paid him $1 billion just to leave. He is played by Jared Leto, and his wife is played by Anne Hathaway. So some big talent. He's sort of like a rock star in a way. Has to be the greatest salesman in the world. He then used his $1 billion to go and buy up some apartment blocks in Austin, Miami, and Nashville. And the new business is called Flow, which he basically has gone as far as to say, what I did to commercial buildings, I'm going to do to residential property. What that means, no one has any idea because there's very little detail. But there has to be something to it if the biggest venture capital firm in the world has put $350 million behind him.
Well, WeWork's still around, so it's not buried in underground, even though he's got nothing to do with it anymore. So we just got to watch this space. All right, Cuzzy, my very creative and impressive brain has, I think the right side of my brain, has just come up with a new segment, three-letter phrase. And I'm going to call this episode this.
What do you got?
It's called Big Boys Bidding. And yes, sorry, that is a little bit on the sexist side, but BBB, it just makes better sense. But we've got BHB trying to buy out Oz Minerals. We've got Nearmaps that has just been bought for big money.
$1 billion.
$1 billion, that's right, with the pinky in the side of the mouth. And we've also got some of the biggest residential transactions ever that have happened in the last week.
This is a big deal.
This is a big deal, and it starts with the Big Bertha of Australia's stock market, the biggest company outside of our big banks. In fact, it might even be the biggest. I'd have to check. It can rotate. But BHP, the mining company, have lobbed a not insignificant $8.4 billion offer at Oz Minerals, which is a a copper company. So copper being a lot of the copper gets used for renewable energy. So it's been framed that this is a way to future-proof the BHP business. It's got a lot of old copper mines apparently, but it's not. It's a pretty aggressive offer because it was lobbed at a 30% premium to the trading price of Oz Minerals. Oz Minerals got as high as nearly $30 start of the year. It dropped down to $15. We're sitting at about $19 when BHP lobbed a $25 per share offer. That is as aggressive as it comes.
I'm really rich.
Well, that is what the Oz Minerals guys are saying right now. That is for sure.
And James, correct me if I'm wrong, right? But the Oz Mineral guys actually said, no thanks.
They did. In fact,
they declined.
They initially... They initially received a $25 per share bid, but I think they didn't like how it was framed and staged, etc. So BHP went back, restructured it all, combination of shares and cash, and somehow still $25, but maybe the terms are a little bit more attractive because it has been accepted. So a massive deal to kick us off in this little new segment of yours. The other big deal was near maps.
Huge.
Now, talk us through near maps because you are a savant with near maps.
Just a little near maps whiz, performing my wizardry. Okay, so near maps. Near maps is like Google Maps, but on steroids. And that's because you pay a subscription, so they actually make a considerable amount of money from its users. And what you can do is overlay, you can figure out distances between things using the maps. You can mark things out. So for me, working in acquisitions, I go to an area, I figure out how many kilometres from here to here using the line tools, or I can circle out. It's got all the boundaries. It's got all the main roads. It's literally, if you are an engineer or a real estate acquisitions person, and sort of off those branches, you will live on near maps, especially when you're locked down for 2 years and you can't actually get to, the state that you do a lot of your work in. So it was started by a Perth guy. It's Aussie, and it was free, and then I think they transitioned into a payment system, I want to say early 2011, 2013, 2012, around then.
So what happened? Yeah, well, apparently what happened, and I had no idea, I only read this over the weekend, but it actually started near maps as a company called, I'm going to use the Ipernica, which was a patent trolling company. So they go and buy all these patents from companies and then sue companies that infringe. That was how they made their money. And then near maps in 2012, they decided to rename themselves because they thought near maps was so impressive at the time and had so much potential. Apparently it takes 2 or 3 photos a year, whereas Google Maps only takes a photo every 3 years. So it's a lot more valuable. A lot more valuable to insurance companies is one of their big customers and a few of the others. So you're right. They shifted in 2012 from making money through advertising to charging a subscription to those types of companies, whether they're insurers, governments and roofing companies. I don't know why roofing companies are such a big part of their business, but they are.
Well, you can see people's roofs on there. I think a lot of emergency services use them as well. And because I've used it in some scenarios where they've got 10 new GPS photos in 1 year. So you can imagine you're literally seeing the place unfold. And I can go back to 2009 when they first started taking pictures. Anyway, we're not trying to sell near maps. I just get so excited.
I was going to say, so to go full circle, the guy that did start it in Perth, where I was going with that and I lost my train of thought, he sold in 2008 to the patent company for $16 million. Okay,
well, 16 million is not a bad day.
Hey, he still did really well.
It's not a bad day.
Company was only making $5.6 million all the way back in 2012 a year. They're now making nearly $150 million. So some huge growth. I don't know how many subscriptions that works out to be, but there must be a lot of big companies putting a lot of big money into that company.
Oh, yeah. And if you didn't hear us say it before, Near Maps has been bought for $1.1 billion. So it seems to be handy for quite a few people.
So, for all the doomsday that's going on out there when it comes to real estate prices, you'd be forgiven for thinking that we're in the worst crash we've ever seen. There has been 2 record sales within days. So the record was broken last week and then broken a day or 2 later in Melbourne with 2 monster sales not too far from where you live. So maybe paint a bit of context for us. What's going on down there?
Sorry, I love that you've just said not too far from where you live. Like where I am is remotely comparable to the price that these guys are paying.
Well, you drive past it on the way to work.
Yeah, disclaimer, where I live is 1/80th of what these are worth. Just a small disclaimer. Because, yes, Monster deal. And I actually sent you one of these, I think, I don't know, it was last week, the day we recorded, just going, holy smokes, what's going on here?
Same agent too, by the way.
Was it?
Same agent.
Way.
He's had one hell of a week. He can take the rest of the year off.
Hey, I reckon he could take the decade off. He's like, oh yeah, what? Australia's going into a recession. No worries. I'll just buckle down with all me comms. Anyway, so a massive sale in Toorak, no less. That's our suburb of the rich and famous and extremely wealthy, probably some of the wealthiest families in Australia. In fact, not probably, definitely. An $80 million sale. Now, yes, it is big numbers, but here's what's so amazing about it. Number one is that it was purchased by a 27-year-old businessman who I believe also bought another property some 16 months ago for $38.5 million. And I'll just say that all I know about this guy, in the same suburb, by the way.
Same street, apparently.
Oh, my days. All I know about this guy is that he's got some kind of gambling platform where you can gamble using cryptocurrency. So seems relevant. It seems like it checks out. Now, 7,200 square meters. So you could say it's an estate. So yes, he paid $80 million for it, but he's got a whopping piece of land. And this is a really, really satisfying number. He paid $11,111 a square meter.
All ones.
Previously
That's a lot of money
sold
per square meter.
It is, but you pay like $8,000 to $9,000 a square meter for an apartment in Melbourne. But granted, they're like 60 square meters. Previously, this property was sold for $5 million, albeit in 1991. So nearly 30 years ago.
Wow. And I worked out the numbers on that. That's a 9.4% rate of growth compounding on itself over the past 21 years. Not a bad return for that person. Having said that, though, it's not as high as I would have thought. Just goes to show how it can add up over so many years.
That's right. How'd you come at 21 years? You should say
91 to 2022, 31 years? 31 years, sorry. My bad. Yeah, 31. My bad.
Cuz, you're adding years on me. You're adding years on me here. It's not quite 30 years, all right?
Okay.
You make me feel old.
My sincere apologies. I realise you would have probably been born in that year, in fact, the year after.
Exactly. So don't round me up.
All right, and then talk me through the next one, $72 million. This agent's got a $72 million sale. Would have thought he's going to dine out on that being a record for years to come, only for it to be trumped 2 days later.
By the $80 million 27-year-old. Yeah. So, look, we don't know a lot about this except for the fact that it's, 3 or 4 doors down from the $80 million sale. $72 million, St. George's Road, by the way, in Toorak. And this one, $9,180 per square metre. I don't have the square meterage here, but it also looks
7,800 square metres.
It's an estate. It is an estate. And I guess, look, that's the major appeal in Toorak here is that you can buy massive estates and they're very, very private. Look, these purchases, cuz they make the Atlassian founders purchase not long ago look very cheap.
I was thinking that too. Like, you know, if you drill into the numbers, the Atlassian, for those not familiar, the two Atlassian founders bought houses next door to each other within about 18 months. Now, it was 4 or 5 years ago. But in 2018 in September, one of the founders, and I think it was Mike Cannon-Brookes, bought one for $100 million in Point Piper in Sydney there. $100 million, but he got a bigger block of land. He got 11,200 square metres.
And sorry, cuz, can I also say, and I don't mean to discredit the Toorak guys, but he's like on the Point Piper harbour. He's got 11,200 square metres with arguably one of the best pieces of real estate in the world. And I don't even like Sydney that much.
North-facing waterfront, right opposite the school where his kids go to school. So it is very, very impressive. That worked out to be $8,900 a square metre. And his co-founder, Scott Farquhar, bought next door. Now, his is on 6 titles. Not as big though, 6,897 square metres, so just under 7,000 square metres. He paid $71 million for that one in April 2017, which worked out to be about $10,294 a square metre. So still cheaper than what the crypto founder has paid at his $80 million place. For no doubt fantastic, amazing real estate, but not north-facing, not waterfront, not in Sydney. You'd hate to think what the two Atlassian founders' properties are worth today.
Just incredible stuff. And those are the numbers I love looking at. Because can I say, yes, these are unique deals. They're big money deals, but it's a relevant conversation because last weekend – auctions hit the highest clearance rate in 12 weeks. So we've had, 3 interest rate increases. Everyone's talking about the market quietening down and I guess, not as much prospective growth. So, and then yet we go and have the biggest preliminary combined capital city clearance in 12 weeks, which was 62, nearly 63%. That is lovely.
Correct.
It's lovely.
And we've always said somewhere between 60 and 70% is a fairly balanced market where you've got sort of a good balance between vendors wanting to sell, buyers wanting to buy. So it's a healthy market. I think a lot of people comparing it to this time last year when we had 70+% clearance rates. That was sort of unhealthy. It meant there was way too many buyers for the amount of properties that are for sale. It is encouraging, though, that it's the biggest clearance rate we've seen in 12 weeks. I think it's an indication that when paired with those massive sales during the week, clearly suggests that if nothing else, the market has stabilised and isn't in any form of free fall like you might be reading about in the papers today. All right, favourite segment of the podcast for an unnamed majority of people. Throw to the stinger.
What did you Google?
What was that?
What did you Google this week? I Googled.
That is incredible. Well, this is incredible. In fact, it is the perfect way to round that segment out because, Alex, I Googled this week, what has Warren Buffett, the most successful investor in the world, what has he bought this year? Because it was reported this week that he has made a massive, massive bet on a company called Occidental Oil. So it's an oil company. He's capitalising off the conflicts coming out of Russia at the moment. Obviously not very pro-teal or green movement, but in any event, if there's a dollar to be made, someone's got to mine it. He has spent more than, or he's proposing to spend, in fact, $50 billion to buy the company, to make it private and sit under his banner. And I Googled, what else has he bought?
Ooh.
Turns out, our man Warren has been on a bit of a spree this year.
Has he?
Not deterred in any way by the fact that the share market's down 25%. In fact, quite the opposite. He spent more money in the first 6 months of this year buying things than he has in all previous years combined, according to my Google search. He has bought 16 companies, shares in 16 companies, including Apple, which he was already the biggest shareholder of, and including shares of his own company because he thinks his own shares are undervalued.
Okay, that's interesting. So he's doubling down, but is he also does that also make your shares worth more when more people buy in?
Potentially,
big share.
But
that's interesting.
He has bought shares in a vast array of companies, some energy companies, some technology companies, an entertainment company, Paramount, Citigroup, the bank.
Well, yeah.
Apple, Formula One Group. I don't even know who that is, but I assume it's the Formula One that you watch on Netflix. Laura and Decor, don't even know what they do. And Markel couldn't. In fact, my Google search didn't quite get me to what they do. But that is the fun fact. He's.
In fact,
not the fun fact.
Sorry. I love how you say, yeah, and then Floor and Decor, I don't even know what they do. It's like, well, their name is Floor and Decor. So if you had to take a wild guess, yeah, God knows what Floor and Decor do. Jeez. It's like Fantastic Blinds. What do they even do?
Oh, I got nothing on that. Hey, it did get me thinking, though. He's got this famous saying to be greedy when others are fearful.
Yes.
And he's doing that. What are your thoughts? Like, what do you reckon in a real estate context that could mean? Like, do you pick up bargains, when people think the market's not going too well? Can you pick up – what's your thoughts on that in the context of property?
Because not rejecting or declining, but let's put it in quick shots.
Okay, we're parking it.
Park. Revisit.
It has been parked. Quick shots on Friday, guys.
Now
let's go to the last stinger, shall we?
What's the okay? Yeah, stat fact. Stat fact.
The stat man.
Stat fact. Don't you bring those shoulders to my wedding on Sunday?
Mate, those shoulders, they were. Hey, I'm actually a little bit insulted by that. I thought that was good movement.
Well, we bring more. Bring more. Bring more. Vacancy rates. Let's talk about vacancy rates. And by vacancy, we mean rental vacancy rates. That is essentially how many rental properties are on the market vacant or for lease at any given time. And I think, we kind of just fluff off these willy-nilly and forget to sort of maybe give it a bit of context often. And a client came up to me last week when I explained vacancy rates in Adelaide or something, and then I was explaining what 0.5% meant. And I said out of every 100 rental properties, there might be one available, or there's half, which is not possible.
2 out of the 4
at any given
bedrooms
time.
available. Yep.
Yeah, that's right. There you go. And she said, I just want to thank you for explaining that. And that's pretty much what we're seeing across the board. The vacancy rates are extremely low. So a balanced market is about 2 to 3% vacancy. So for every 100 homes, 2 or 3 might be available. And that's a balanced market where everyone's happy, landlord and renters. Right now we're seeing the highest is actually Melbourne, and it's 1.6% vacancy rate. So it's an undersupplied market, and it's still the highest. So Melbourne 1.6%, Sydney 1.5%, and then Brisbane 0.7%. So not quite one property for every 100. Perth 0.6%. Adelaide so low, still low, remained low for the whole of the last 12 months at 0.4%. And then Canberra, Darwin and Hobart all sitting below 1% as well. So a tough time, and it hasn't changed. Interest rates may be one thing, cost of living is another thing, but we've also got these rental vacancy rates remaining extremely low, and it's probably bloody expensive to move right now as well because of all that CPI and inflation.
Yeah, and if you think about it too, you need some vacancies. It's impossible to have no vacancies because you've got leases expiring, people moving out. So there's always going to be probably 0.5 to 1% is just the natural churn in a market. A balanced market is considered to be between 2 and 3%. Not a single market in Australia sits in that category at the moment.
That's
and
right.
You're right. I would say Adelaide is like dire concern crisis level at 0.4%.
Oh, without a doubt, and you have to ask yourself, is that because it's a small market that's dealt with a lot of people moving there for affordability, or because it just moves so slowly? They just haven't seen what they've seen in the last 12 months. I don't know, but I was talking to my prospective father-in-law to be on the weekend, and they are in apartment development. And he was saying, bring it on, because this can only mean great things for apartments and our vacancies, because he said, it's actually quite hard to lease apartments and, people don't really want to live them. I said, well, it's pretty hard to rent anywhere else, so it's probably going to be a good thing for you. And he's stoked to get the migrants coming back in, because they will absolutely rent in those inner city sort of 5-10K kilometre rings. So it's a
Looking forward to meeting the great man Henry on the weekend.
Good time for apartments. Yes. He looks like a Hollywood movie star. You won't miss him, cuz.
And just to round that out, rents up as you would expect in this market where it is much harder to be the tenant than it is the landlord. Rents up nearly 20% in Sydney. They're up by a little bit more than 20% in Brisbane. Adelaide, 18%. So those big markets that are seriously undersupplied. Even Melbourne, up 17%. And a lot of them were up by more than 1% for the month as well, which suggests that it's not really slowing down. So tough time for tenants out there. Feel for anyone who's in that position. I think all you can do is try and be the best tenant you can possibly be. If you're a landlord, well, interest rates are going up, so you got to run it like a business to a degree, but make the most of it, because it probably can't last forever. Oh, well, that was a lot to pack into an episode, and I'm somewhat sad that you'll be gone another 2 weeks. Feels like you only just got back.
I know. But I did.
C'est la vie. We're going to miss you. It's going to be an exciting week for you. Moving as well, we've still got you for the quick shots, but on behalf of the whole pod, good luck on the weekend. Break a leg.
Good luck for the rest of your married life. You're going to need it.
Good luck to Dean.
Good luck to Dean.
Thanks for listening to another episode of The Double Shot with your favourite cousins, Alex and James Fitzgerald. If you've got a burning question or something we absolutely need to talk about on the pod, please write to us. Both of our emails are in the show notes. For little real estate tidbits and a little bit of banter, okay, a lot of banter, you can follow us on the gram. Our handle is thedoubleshot.podcast. That, my friends, is thedoubleshot.podcast. Until next time, think of us when you sit back and sip your next double shot.